Welcome to the SBI Securities Weekly Market Pulse, where we will be discussing views on Nifty, Bank Nifty, sectors and stocks in focus, and along with that, positioning of FIIs with respect to the open interest data. Now, post a positive opening yesterday, we saw Spot Nifty taking support at 19,730 levels and witnessed a continuation of Thursday's positive momentum, gaining 0.5% to end the session at 19,820. Now, this is the highest close what Nifty has witnessed after 21st of July, and with this move, the indices are just 1% away from their all-time high. Yesterday's rally was supported by an outperformance from Bank Nifty once again for the second consecutive day. Now, the key to approach such markets which are near its all-time highs is not to find resistances. It's to mark important support levels, use the dips towards those supports, and ride the trend on the upside. Comparing the Nifty to S&P 500, just to find out whether the Indian markets are outperforming the US markets or the global markets. Nifty is outperforming the US market since last 6 sessions, and we feel that this outperformance can continue for the coming week too, with large caps now participating in the ongoing rally. So coming to Nifty, with this close above 19,800, indices have broken out of a 30-day consolidation, and now the important support levels are at 19,550, 19,600. Until this zone holds, we could see the momentum continuing on the upside. So for the coming weekly expiry for the next 4 sessions, highest put writing, if we observe, it's at 19,600 and 19,700 strikes, which implies that 19,550, 19,600 support zone which we are mentioning is going to be a very crucial support going forward. And till this holds, bullish momentum up to 20,050, 20,100 could be witnessed. This looks likely because along with IT, even banking has started to support Nifty. And on the upside also, now if we see the call writers where they are placed, the aggressive call writing is witnessed in 20,000 strikes, which means that 20,050, 20,100 could act as a near-term resistance for the coming few sessions. But if we see overall trend is bullish positionally. The key trend decider support levels on the downside would now be 19,550 from here on. So all the long positions should be trailed with a 19,550 stop loss. With banking now performing, we saw Bank Nifty performing for 2 days in a row, and even IT has continued to display strength. Now, apart from these two pillars, the onus is on Reliance, which has kind of underperformed in the last several weeks. However, if we closely observe Reliance, it is building up a strong base at 24-30 kind of trading band, which it is holding since last 8 days. So I feel that the most crucial level on the downside for Reliance would be 2400, and it is important that Reliance crosses 2460 on the upside, because that's where the 20-day exponential moving average is placed. And why this is important is because this 20-day exponential moving average signifies that the average of last 20 days closing prices, once it is crossed, that could mean that short-term strength will return back in the stock. So 2400 on the downside, 2460 on the upside, very important levels for Reliance, and that could act as a trend decider for Nifty also in the coming week. Coming to Bank Nifty, this index has managed to close at a 6-week high post outperforming in the past 2 sessions, and with this it has even broken few important resistances on the upside. So we feel going forward 44,700, 44,750 could act as an important support, with significant put writing being witnessed in 44,800 and 45,000 strikes on the puts. And till this zone holds, upside up to 45,500 could be witnessed initially. Now, small resistance would be witnessed at this zone of 45,500, with significant call writers already placed at 45,500 strikes, and along with that there is a pending gap created on 2nd of August. So overall, the range for Bank Nifty for the coming week could be 44,700 on the downside and 45,500, 45,550 on the upside. Now, while we are discussing about the Bank Nifty levels, it's also important to just see how the internals and in Bank Nifty are behaving. Now, Bank Nifty is 5% away from its 200 DMA currently, and the similar situation is also there in Axis Bank and ICICI Bank, which are outperforming, and they are much above their 200 DMAs currently. but it is HDFC Bank and it is Kotak Bank which are below their 200 DMAs, and these levels needs to be crossed for a sustained upside in Bank Nifty. And for HDFC Bank, the crucial level now on the upside would be 1635 to be crossed, and for Kotak Bank it will be 1830. Few other pockets of Bank Nifty which are showing strength is IndusInd Bank and Federal Bank, and there we have seen some good long open interest build up. So all in all, Bank Nifty looks well poised. 44,700 could act as an important support, and we feel 45,500 could be likely levels in the coming week. Coming to FII data, FIIs yesterday have been net sellers to the tune of 225 crores in cash, while DIIs have been net buyers to the tune of 1150 crores. FII's long short ratio for index futures, which means total long positions in index futures out of the net positions, that ratio has seen a good improvement to 58%. Now remember, over the previous weekend we were discussing that the fresh series has started at 50% long ratio, but this is a significant improvement, 58% compared to 50%. And compare this to the last August series, where for the most part of the series it was hovering around 40-45%. So this kind of is mirroring the sentiments which are currently there in the markets, and we feel that the sentiments are bullish even with respect to the FII positioning in index futures. Now apart from being buyers in index futures yesterday, they were sellers in stock futures. But if we see index options, for every one index call sold by FIIs, they have sold 1.6 times the index puts, which is a bullish sign. So higher the amount of puts sold will always means bullish, if that is compared to the number of calls sold. Now let's discuss where there can be interesting opportunities in terms of stock and sector specific moves. Once again, it was defense in CPSE stocks all the way in the past week. So apart from these two sectors, now going ahead, we feel that the bullish momentum can continue in power, PSU banks, auto, chemicals, as well as capital goods. All these sectors and key stocks in these sectors, they have shown some good traction. So last week we were discussing within the CPSE stocks, REC, PFC. Within the power stocks, we were discussing Tata Power, NTPC, PSU banks, Canara Bank, Bank of Baroda. Within the auto space, it was Maruti as well as M&M and TVS Motors. So capital goods, it was L&T, Siemens. So all these stocks which we had identified throughout the course of the last week have performed, and we feel that the momentum in these names could continue going forward also. And apart from that, infra, consumption and real estate stocks are also showing some kind of positive traction and are looking bullish. Just a bit now on the macroeconomic front, kind of Brent crude prices now have inched up to $90 a barrel, and even dollar index is sustaining at 105 levels. So although as per the charts, Nifty is bullish, all the FII data points are bullish, but one must not be complacent and be over leveraged and have the fear of missing out feeling, the FOMO feeling. Last few days we have been recommending that although the mid caps and small caps are performing well, but with the kind of macros developing, it would be advised to book partial profits in mid caps and shift to large caps partially from here on, because we feel that large caps have already broken out of a consolidation range, and in such an environment the safety of capital is much higher if we are positioned in large caps. That's all for this episode of SBI Securities Weekly Market Pulse. We hope you enjoyed listening to our podcast and are finding it useful for your trading decisions. Kindly do subscribe to the channel for regular updates and such interesting insights, and also do share it with your friends and relatives. Happy trading, stay safe. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.